Good to have you with us. Thanks for tuning in to another episode of Investor's Guide, a show where we help you understand how to go about all of your financial planning. Now, on today's show, we're going to talk about Budget 2021, which was recently announced, and what impact has that had on your investments, on the taxation that you have to pay, all of that, and what exactly is it going to kind of impact is it going to have as far as the equity markets itself are concerned. And joining me to understand a little bit more is Feroze Azeez of Avni Raja Wealth Management. Feroze, of course, this as far as the equity markets are concerned, this budget has had a huge impact and very positively taken, which doesn't really happen very often, when we look at past budgets as well. But before we get into the specifics, I want to first ask you your overall takeaways, the things that stood out for you most in this budget.
Avni, you're so right. I think last couple of budgets we used to a little subdued reaction from the equity markets. Last two budgets we saw some degree of correction on the budget day and subsequently as well for the markets. Of course, this budget has several positives. It's been a very immensely clean and a transparent budget. Not very complex, very easily addable numbers, nothing overstretched or overstated. So I think transparency, growth orientation, clean tax mechanism. There are several things which stand out, but I think from an equity market standpoint, there are 3-4 things which are important. Basically, let me start with speaking on growth. Basically, there has been a huge momentum on growth of the economy. And when growth of the economy is in question, the government needs to spend capital expenditure. It needs to spend in creating assets rather than revenue expenditure. So the government has spent or at least projected to spend 26% more in the next financial year FY22 in the capital expenditure head, which is a very, very positive thing. Capital expenditure, by which I mean road, transport, infrastructure, rural infrastructure, and several other things. That, I think, has the largest multiplier effect in the economic growth. Almost 3 to 4 times that gets added to the economy. I think that's one big positive.
Okay. Now, moving on to some of the other important announcements that came in here. One, of course, is as far as the financial sector itself is concerned and banks are concerned, a bad bank of sorts has been set up, and even including the entire disinvestment target of the government at this point in time, which includes, the privatization of 2 banks as well as an insurance company, the IPO of LIC. So all of these are big announcements that have come in this time.
Yes, Avni, if we break this down into 2 components, one is the strength of the financial system or the Indian financial sector and disinvestment, which is one more positive. I think the fact that financial sector is expected to get capitalized with 20,000 more crores, which automatically implies almost about 1,500,000 crores more to lend if you look at a leverage of 7 times. So I think that's one big positive. The second big positive is instead of speaking disinvestment, this time the language and the narrative was privatization, which is far beyond disinvestment. Disinvestment is a small stake sale. Privatization is trying to give away control. I think that's a very, very big positive for the financial services sector. And I think the ARC, the Asset Restructuring Company, or the bad bank as it's also called in the current nomenclature, will definitely help clean up the mess of the NPA over a period of time, of course, but has been collected over the years. I think that cleansing is what the banking system needed to be able to have the courage to lend further. Today what's happening is interest rates are lower, but the banking system does not have the courage to lend. I think once this is off their head and gets carved out in a separate bank, I think that will really open up the risk-taking capability of the Indian financial sector, which is a prime driver of the economic growth.
Yes, absolutely. And in turn, eventually obviously help better returns of investors as well, especially when it comes to these specific sectors. The other part, of course, Feroze, is the push that has happened as far as manufacturing is concerned, infrastructure spending is concerned. And we are seeing this entire production-linked incentive scheme, which has now been extended to other sectors as well. And all of this will perhaps result in creation of more jobs as well. But this is also going to have a very strong long-term impact on the economy.
Yes, Avni, I think it was very important, and it was to see whether the budget would put where the money and the mouth has to be at the same place. Like we've been speaking of Atmanirbhar, we want to be a manufacturing hub, but there has to be action and intent, which I think got expressed categorically in this budget, which I think is almost like 2 lakh crores to be given as production-linked incentives over the next 5 years. That definitely helps us compete globally from a manufacturing hub standpoint. And I think from a disinvestment standpoint also, wanting to privatize 2 banks and 1 general insurance company, and the LIC IPO itself is going to be large enough with almost 20-25 crore policy holders. That's a very large financial institution. I think disinvesting using an IPO route can create a huge amount of surplus from this disinvestment target, and I think it will get achieved, unlike the last year where we couldn't achieve the disinvestment targets.
Now, the other part of the budget, Feroze, is as far as the personal taxation bit is concerned, and there are always huge expectations on that front. This time round, we didn't really see too much except a little bit of tinkering here and there. A, were you disappointed? And B, the other way to look at it, of course, is there was no additional burden put in terms of, the COVID cess that was being, expected very widely.
Yes, Avni, this was a huge pleasant surprise that there was no tinkering across strata of taxpayers. There was no increase in taxation in a year where we had a 9.5%, or we project to have a 9.5% fiscal deficit as a percentage of GDP. And next year also, I think 6.8 is a large number, which speaks of the loose-handedness and the intent to spend and still not tamper with the taxation. And the only cess, which was the agri cess, also has been mitigated with excise duty reductions, not impacting inflation. I think it's so logical to have a consistent tax regime. You can't have a moving goalpost every single year from a taxation standpoint. So simplicity, I think, and not tampering with it is a very big advantage. Of course, people might have had expectations of some SOPs this year as well, like in the past, but not having any change or increase itself is a big gift to my mind.
Okay, and among the small changes that were announced, one is the payment of tax on interest if the PF contribution is more than 2.5 lakh. That was one important change that has come in, and also some sort of relief for pensioners and those who are above 75 in terms of filing income tax returns. These were two of the important changes coming in.
Yes, Avni, I'm not very excited about the 75-year plus exemption of filing income tax return, which is just a logistical gift. It is not any tax reduction. And now we have a confusion with respect to 60 plus as senior citizens, 80 plus as super senior. Now we have another category, 75-year plus, and there also there's no tax discount. It's just that you will not have to file the return. So it actually benefits a very small group, and that too just benefits in terms of not having more paperwork to do. So that's not something which I'm excited about. Looks like a big headline, but I think it's a little more of optical value than actual value. What on the PF side, like you, Avni, mentioned,
yes,
the interest component will now get taxed beyond 2.5 lakhs. There also there is no problem, because even if a person earns 40 lakh rupees and contributes 3 lakhs to PF, the 50,000 rupees, which is greater than 2.5 lakhs, gets taxed, and that's only a 4,200 rupee impact, even if your salary is 40 lakhs approximately. So I think that's not a big thing. But in PF, we all have to remember that we get almost 1.5-2% more. That's a good gift anyway. Even if it is taxable, I would continue to put my PF as I would in the past.
All right, Feroze, we'll have to leave it there. Thank you so much for joining us and breaking down the budget 2021 for us.